Market's saying one and wait, which was a radical position that I took about a month ago, but now I think everyone's with me. Now the question is, are you supposed to wait and then one? But I'm fine with the Fed raising rates, but it's pretty clear that there's some areas of the economy that have taken a hit. I know that Steve said that retail is good, and no, Becky said that, but those were 4-6 weeks ago, and holiday season just okay. Not great, not what we were looking for. Mall, much worse than we thought. Obviously, replacement of jobs online means a radical decline in the amount of what you pay people. I think that a lot of business formation is beginning to slow, and I think that these numbers do not reflect the decline in oil, which is really where all the manufacturing is geared to. So a huge percentage of the increase in manufacturing. So I look at it and I say, okay, well, the Fed's really done its job, and they have to wait now to see it. They obviously leaked the story to the Journal, which I thought was pretty great. You pick it up and it's got that they've changed their view without ever having to admit that they changed their view. So it has to be people like you and me who call it out, because it's important when the Fed gets something wrong to criticize them, because they're just humans.
Hey, Jim, were you, though, surprised at some of the optimistic and positive talk that you heard from some of the CEOs that Becky talked to yesterday?
Yes.
Yes, you were?
Absolutely. I mean, you know, the numbers for the banks are particularly atrocious. I think the world of Jamie, but he's doing better than most, and I think that stock is actually a buy. But I'm really surprised at the slowdown in economic activity. I've talked to the CEOs of every bank that spoke with the major banks, and I've had to try to buck them up, and I'm a pessimist about growth.
Jim, you think they say one thing in public and another in private? Because, I mean, if you looked at the Goldman Sachs conference earlier this week where Tim Sloan spoke and Brian Moynihan spoke, they were relatively positive. You can see some signs of a little bit of cracking. Yeah, but that's what I mean.
What are they going to do? I mean, I'm not saying that they're liars. I am saying that it's difficult to say what the numbers say. I mean, if you say what the numbers say, then you know that business is turned down. There are certainly a lot of parts of the economy that are still okay, but the numbers are dreadful. Far worse than I thought. I had banked on some of the banks having more activity, certainly doing more to finance growth. And I'm not saying it stopped. I am saying it did slow more than I thought. It's not on a dime, but the last 6 weeks, 8 weeks have been dreadful for the banks. And I think they're kind of shocked themselves. Their table of employment is way too high, as you see from Tim Sloan. Tim may be really optimistic that believe me that the automation is not causing the firings. So, I mean, I think the banks are trying to get in line with the slowdown.
Jim, okay, we got to go. But I saw you thinking Broadcom yesterday, and then that was a pretty good number. I mean,
he did good.
There was some volume in that rebound. Are we getting close?
Absolutely.
Yeah.
Hock Tan did some good stuff last night. The Broadcom CEO. Look, I'm not bearish. I'm just saying the numbers for banks.
Maybe we're searching.
They put a positive spin on bad numbers.